On key issues, and today we're talking about personal taxes. Small business owner and columnist Gene Marks joins me live to break down the different positions for us and then let you make your own conclusions. Good morning.
Good morning, Eva. And by the way, I apologize. I forgot my red sweater this morning. I should have had it on.
If anyone could rock the red sweater and white on white
I got to
look.
go on to Kohl's website, whatever it was, you can buy the Town Hall red sweater.
Yes, next segment you can do that. So let's talk a little bit about what we've been doing, my friend. Every month you've been kind of breaking down some key issues for us. A lot of folks still undecided on who they're going to vote for. So today we're talking taxes. We talked a little bit about taxes last time, but we're zeroing in on personal taxes specifically, which of course impact all of us. Let's just dive right in, Gene. Where do the candidates stand on individual tax rates?
So, and by the way, could it be any more important than taxes for all of us, right?
Huge issue.
Very important stuff. And when we're looking at overall taxes, by the way, and we'll talk about individuals, just be aware, Hillary Clinton's approach to taxes is basically keeping tax rates the same but increasing them for the wealthy, whereas Donald Trump's approach is to reduce tax rates to spur growth. So just two candidates, completely different, approach to taxes. So on individual taxes, Hillary Clinton right now, individual taxes stay the same. The top tax rate is 39.6%. However, if you're among the very wealthy, earning more than $1 million a year, for example, surcharges take effect, right? She also wants to make sure that people making $1 million a year are paying no less than 30% in taxes. That's sort of the Warren Buffett approach. So again, wealthy earnings getting taxed more under the Hillary Clinton plan. Donald Trump, he wants to reduce taxes to 3 brackets, the lowest being 12% and the highest being 33%. So starting with individual taxes, he wants your taxes to go down. The idea is that you have more money in your pocket, you spend it on other stuff, spurs the economy, growth, all that stuff. Two
very different positions to consider. Also, some differences in the capital gains tax and that approach.
So capital gains, again, is like, you're selling real estate, you're selling stocks, you're selling investments, right? So there's a different tax rate for that. Right now, the tax rate is 20%. So you have a gain, you pay a 20% tax on that, okay? Hillary Clinton itself wants to, again, keep that tax rate the same. However, she really wants to encourage people to hold on to their capital investments longer. So if you cash in your capital investments in under 6 years, she's going to tax you a little bit more, like on sort of investment income. So she wants you to hold on to it longer. Donald Trump wants to reduce the capital gains tax. Depending on how much money you make during the year, what your income level is, he wants to go down all the way to 0% and up to 20%, depending on your income level. So again, Hillary Clinton keeping taxes the same, maybe increasing them a little bit. Donald Trump, he wants to reduce capital gains tax.
Very different. And the same thing's true with the state taxes. Kind of both ends of the spectrum, right?
That's a big issue. So right now, if you're lucky enough to have more than $5.5 million in assets, anything over that when you go on to the next world and pass that down to your family gets taxed at 40%. That's what the rate is. Donald Trump wants to eliminate the capital gains tax altogether. Hillary Clinton wants to tax everything now over $3.5 million and increase the rate to 45%. Actually, up to 65% if you've got like $50 million more in assets. Again, taxing the wealthy. So again, same example, same theme here. Trump reduced taxes, wants to spur growth, wants to get rid of capital gains tax, estate taxes. Hillary Clinton, she wants to keep the tax rate, wants to actually increase it just a little bit.
And I'm just running out of time, Gene, but I know the candidates have some different platforms on special deductions too. So just quickly tell our viewers what they should consider.
Very quickly, if you are a family with child, you're paying for child care, you're going to like both tax proposals. Hillary Clinton today is actually announcing an increase. She wants to double the tax credit to $2,000 a year and lower the income level that applies so that you can get a tax credit for child care. Donald Trump wants to offer deductions for child care as well. Trump also wants to offer a deduction for health care. The big issue before we leave, just to make sure we're clear, is it all sounds great. Donald Trump's reducing taxes and all that. Just you got to be aware of what this does to the federal deficits. And the biggest issue people have with what he's proposing is that it will increase the deficit and the national debt a lot.
Big issues to consider. Thank you for weighing it all or laying it all out for us, and then our viewers can make their own conclusions. Gene will be back on Election Day with with his red sweater and some final thoughts. You don't want to miss that, the red sweater especially. Stay with us. We'll be right back.